Good afternoon and welcome to the SCOTGOLD Resources Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Phil Day, CEO. Good afternoon, to you, sir.
Well, good afternoon, everybody. Glad to be here once again. Feels like we were here only a month and a half ago, but as we promised, we like to keep these fresh and give these updates every quarter once we've done the reconciliation process and understand exactly what the numbers are. So there may be a little bit of a repeat on what we talked about the last time, but never really hurts at all because the story is a wonderful story. So straight into the numbers for this quarter 3. As we announced last webinar, we downrated our guidance, but then in October we achieved exactly what we thought we were going to achieve. We actually hit some milestones, which I'll go through in this presentation, which are very dear to us because we've been talking about them for a while, and some of the projects that we've been putting in place allowed that to happen. So we achieved exactly on guidance for gold production. Some feedback has been always given to us about our silver production, which it is there. It's always there in the background. We just haven't really announced it because it's not one of our major revenue earners. But there, we'll put it into these presentations going forward for people to see. And then again, in our quarter sales, there's a bit of a dip down on Q2, but it was kind of a little bit predictable. We go based on what we talked about at the last webinar with the access to the 415 ramp, which was a very short-term issue that we've got over and addressed now. But wonderfully, because we've got all of our concentrate contracts locked in US dollars, it means that we are still seeing the gold price in pound terms in and around the 1,500 pound mark, which is enabling us to keep ourselves revenue positive. Right, so graphically representation, the blue bars in this represent what we were doing in 2021. The gold bars, gold squiggly line is a representation of what it's been like for this year. Yes, it's been somewhat wobbly, again, as predicted, based on the way the mine has been developing, but these are the numbers that we've achieved. Q2, 3,200, Q3 down to 2,000, and Q4, we're estimating between 3,000 and 3,900, again, based on grade and our access to different ramps, which again are a small term issue, but the more we do of these when we go into Q1 and Q2 next year and hit our 6,000 tonnes per month mark with phase 2 was where we were principally focusing on. Right, so as we talked about in last webinar and probably the ones before that, optimization of mine and plant is where we're at. We've achieved phase 1, but where our big revenues are achieved is when we hit a phase 2, principally based on the fact that our gold mine is a very high fixed cost base operation, in and around 80% fixed, 20% variable. So the more revenue you can make for the same sort of cost, obviously that just translates to profit, which I'm sure Sean, CFO here, will go through in a lot more detail than me. Okay, so what we talked about in Q2 was to do some systems building work and to work on our mobile fleet in the underground. That enabled us to achieve a 3,000 tonnes per month, which we did back in February. Then moving into Q3, we did all this work on power and ventilations, which we talked about was delayed. It took us a while to get that right, but we focused on making sure we got it right. Then when we got it right, we worked on the ramp to get up to the 415 level. And now we're actually going from the 415 straight up to the 430, which we've been progressing through this month at pace so that we never fall down in that trap again, whilst we're also mining out the ore on the 415 level. But what that enabled us to do is we got up to the 4,000 tonnes per mark through the mine and into the processing plant through October. So we're on track achieving our targets and pursuing the number one goal, which is to get to the end of Q4 and to Q1 next year of phase 2, which is where our revenue starts to really, become much, much higher than it is currently. Right, moving through, this is a graphical representation of our ore and waste as we've been mining through 2022. As you can see, back in January, we're down in the 3,000s. And now in October, we've effectively doubled the capacity of the ore and the waste that's coming out of the mine. On any given day, obviously, depending on the mine plan, we have to selectively take out waste in preference to ore, or sometimes the other way around. But the name of the game is to get the fleet that we have at a availability and utilization, and to have our people trained, and to be able to blast, and to be able to have a good design, so have multiple faces, and then churn them over to get multiple tons out the mine, and then get maximum access to grade. And when you've got tons plus grade, that just translates directly into ounces. And with our, like I said, and I'll probably repeat this many times to make sure it's nice and clear, because of our offtake agreement being in US dollars, that means that as long as we get the ounces out the door, we get paid, and we get paid well, which then just translates straight through to profit. All right, the name of the game now, from what we've been doing in probably all of 21 through into probably still today, is developing and doing cut and fill stoping. But we have to transfer into what we call long hole stoping, which is the original design of the mine. The reason we need to do that is this is where we start getting the much higher tons, above the 6,000 ton mark on the mine. The reason the mine actually has to be probably closer to the 8,000 ton mark to be able to get the amount of waste to ore ratio that we require. So this is what enables us to do that. This actually is far more technically demanding and complex, which is why we're making sure we do it correctly. But the benefits are that we get higher resource recovery and lower planned dilution. It enables us to do multiple stopes simultaneously. And as you're doing, obviously with that particular word, it means it lowers your risk in case one doesn't work the way the others. But at the same time, if you can get simultaneous all working at the same time, you get multiple tons. And you get much higher tonnage per meter in this particular method. And at the end of the day, when we're doing the development in this particular method, we're doing the development mostly on vein. So as we are also stoping and every now and then obviously developing on the waste, majority of the time we are still developing on the vein as well. So we can have multiple faces at multiple times and therefore control the grade. And hence why we have much better geological understanding and coming down to the bottom line, which is control of revenue. So this is where we're moving to. I'll take you through some of the pictures of what this looks like and why it's so important to us. I presented this at the last webinar. This is like the, pie in the sky sort of look if you're sitting in a satellite, looking down at what we've done. On the right-hand side is where the porthole is to the mine. On the left hand is where we've developed through, roughly around about 1 kilometre. You can see there we've got a CAF 1 and we have a CAF 2. Again, for repeat, that's cut and fill stopes. In the CAF 2 area is where we're doing all the intense drilling currently to really have a good understand geologically of what's in that area. We know from a resource point of view, but we want to know almost down to a foot here, a foot there, or empirical talk, sorry about that, in proper talk, meter to meter. But back on CAF 1 is where the red lines are. That is where we're developing and mining currently. Why is this important? So if I drill down even further, this is where it starts getting exciting, because we can actually develop up onto multiple ramps. And where it says here, this 415, 431 is where we start to stope. On a very, very granular level, this is what stoping starts to look like. We have this area called 3, then we go to 4, then we go to 5, and then we go to 6. We're going to be drilling from the bottom going up and blasting these and dropping them down into the CAF below. And so therefore, for the amount of drilling to the amount of ore that we're getting, this is where the intensity and the grade control and most likely much higher values of gold is going to be able to be extrapolated through into Q1 next year. That's a very simple way to do it. I could probably talk for about an hour on that, and maybe in the future when we're doing it, when we're going into it, I'll probably talk more and more detail. But for now, I think that's as much detail I could probably present. Right. At the same time, in the mine, as I've spoken to a few times, the process plant has to work in parallel. There's no point mining all of this really great, wonderful ore and then have no place to put it, because that would just be a waste of money. So we've been working tirelessly at getting the process plant to come up in parallel. It hit the nameplate capacity of 4,000 tonnes in October, Just to be clear, it's exactly the same plant as has been installed way back at the very beginning. The thickener has not come online. Nothing else has really come online, but just because of the tireless work of the team on site, thinking about how to debottleneck this and how to debottleneck this, how to get better wear rates through the crushers, how to get better wear rates through flotation agitators and pumps, and working with all of the suppliers in and out of principally Glasgow, which we've had some wonderful support from people that really like our gold mine as much as us. They've been able to just go way above design at the which is at 3,000, and hit the 4,000. They've done that already. Then going into Q4 with a tailings thickener, we fully expect that's going to take us from 4,000 to 5,000, and then finalising some more optimisation thereafter. We'll go from the 5,000 to 6,000. Now, this came a little bit of a shock, I must admit. Last time I didn't really think that this was going to be really achievable. The process plant was showing signs during most of the year that it was, difficult and complex. But the team came together and did a wonderful job, like I said, and all the work that we were doing in parallel with the ore sorter, it was still there, but it just at the moment just doesn't seem as though it's necessary. So, that's just a big saving for us. And then obviously it also presents potential upside, even further upside than we initially always thought. So it is there. By mid-December, we'll make the decision based on the test work all coming together and some engineering works we were doing to make sure it fits within inside the building, all the diligent work that one would expect a proper disciplined company like ourselves to do. So we're still doing that. But like I said, I'm a very proud man to be able to say that the guys and people on site, men and women, have been able to get together and come up with a good plan and deliver on the 4,000 already. So extremely happy about that result. Schematic of the process plant. This is just a generalized drawing, but we do pop a lot of these on LinkedIn these days for people to be able to see the bits and pieces. So maybe going forward, I'll just put some better photos up here for people to see. So speaking of which, last time we just put an update on the thickener. This is the thing that we're talking about. It's quite a rather large device, but it's been constructed and in Turkey brought over, dismantled, brought over, and has now been constructed on site. It is in the latter part of its construction period, even as you see the walkways and the like on top already there, and we are planning to turn this on through November into December. So again, this once it starts again, it should really start to make our process plant go even much faster than it is currently. And then, as I said, we know very well through all sorts of work done on critical spares and failure analysis and uptimes and availability and throughput trials that as soon as the thickener comes in and debottles the back end of the plant, the areas around flotation, the mill and the crusher, which we're doing even more work on, is where we probably apply some more energy into. Low-cost capital solutions is probably a way to say it. And once the thickener is in and we do that, is when we firmly believe we'll be at 6,000 tonnes. And again, I'll just repeat it because it was quite a big surprise. This was not anticipated, this was not planned, but just through the good work of the team on site, it's just become to fruition. And we'll still work on the ore sorter. Absolutely, we'll keep pushing that. But at this particular moment in time, it just does not look like it's required for us to be able to achieve the outcomes that we want. So saying this as a summary, phase one we achieved back in March of this year, and the optimization through Q3 we actually hit in October, principally because of that issue with the mine on the ramp. The process plant was ready, but the mine had to develop that ramp. But as soon as we went straight into the ramp, we had a pretty bumper month from a meterage point of view. We haven't done the reconciliation, but I think it is going to be our top month by quite a long way as far as meters development is concerned. Even though it was complex, we had to do it on certain inclines. We had to go into certain little angles and the like. There was a lot of bit of rework and some complicated areas of mining. But again, the team were able to get through the difficult part, and now we've got a pathway to the 430 ramp already being developed, and we're into that quite a lot at the moment. And we're also done the top cut on the CAF on 415 in parallel. And so going into November, December, we have a good chance to start actually working on multiple headings at multiple times. And this is all very important. Again, underlining our ability to make revenue is all about getting to this phase 2 level, because of our fixed cost on the total company being so high. More revenue that comes in, it just translates to more ounces that we're able to make just comes into revenue and then obviously profit. But in parallel, even though all of this is taking up a lot of our time, we committed to doing the VLF work, which is a very low frequency translated structural geological exploration work, so that we can start going for more gold in the proximate region, because we believe that the vein itself moved across a bit through some geological event that happened a long time ago. That work has been done and is now being processed, and once it's actually finished, that will give us a very good idea on the structure, the angles and the like of where the gold is, and make any drilling that we do in the future more efficient and effective. So again, very excited about that work. And again, this slide here is just a representation of how we did that, and the intensity to which we did it. But I explained it quite a lot at the last webinar. Okay, that's VLF Magnetics, just a picture again of our beautiful location of where our mine is. Right, and we'll finish, I'll finish there with the ESG and work with the community, and I'll just hand over to Sean to just finish off some comments about what we're doing with our local community, and then move into the finance. Sean, you're on mute. Sorry.
Hi, yes, sorry. Effectively, one of the things, or one of the great things that we're doing is the initiatives that we do in the community with supporting the work of the Loch Lomond and Trossachs National Park, and that contributes to the Stratfillan Development Trust, which is a really good initiative. We also, as mentioned in the previous webinar we did, we've got a bursary that with the University of St Andrews, and we're looking at many other opportunities that we can. We're only just beginning, so we're in the early stage of our of our mine life, if you like. So it's really just the beginning, and as we go through over the next few years, we intend to grow this and have a really positive impact. We have a lot of work experience initiatives, apprenticeship programs, and still just even last week there were the picture that you can see was the staff members going around doing volunteer efforts to clean up the local area, a litter pick they call it. So it's really important to us that we put back into the community and not just where we are exactly, but also the wider community and in Scotland. So that's a key driver for us. I suppose in terms of driving shareholder value, everything Phil just talked about, I suppose, what does it mean in terms of, okay, what's the value for the shareholder or for the stakeholders in this? Well, I think at the end of the day, a lot of work's gone into that discussion around that optimization phase that we've gone through, that gets us to this position where we are now. And where we are now is that we're basically looking to move into the next phase, which is growth. So how do we do that? So what's the aim? The aim is that we want to generate cash, increase our production, get ourselves to our target next year, which is that 23,500 run rate ounces. And the target is, as mentioned, Q1 2023, to get us to that point where we can generate those numbers of £30 million revenue, over 20 million in EBITDA, and hence cash. So that's the drive. So everything that we're doing is focused towards doing that. That optimization phase that we're talking about, that's really where we are right now. So Q4, Q1, the biggest focus for us is to ramp our production up so that we can drive forward and do all the things that we've set out to achieve. And again, when you think back to the beginning of last year, we said what we were going to do. We've achieved that, and it was always going to, and it was a lot of hard work, as I said, from everybody involved. And to get now to this phase that we are in now, it's enabled us to get to that growth phase. So what does that do next year? Once we've achieved that, which is Q4 now, Q1 next year, moving into exploration growth, our next focus would be the resource reserve at Connanish and the regional exploration. So it's not just Connanish, There are activities that we can do that grow that resource and reserve in Coronation, but the future also around the other regional exploration activity that will grow and put this company into a proper growth pattern and pathway forward. So we also have the Scottish Gold upside, which we are still looking at, which is producing Scottish Gold, which nobody else is doing. So that's going to be something. But I mean, to get to that stage, we had to really focus on generating positive cash to be able to then move forward. So that's going to be a focus for us next year as well, to really look at that and what we can do. All of this underpinned by responsible mining and commitment to sustainability. So a part of one of the things we do is the dry stack tailings, and that's it's quite rare in mining these days, and that's working very well given that we're in a national park. So for me, I think the key here is the journey where we've set out to do certain things. We said we're going to achieve certain things. We've achieved those. That's lined us up now to really drive forward on these initiatives for growth into next year. So for me, it's a job well done, I think, from everybody involved. All of that translates, as Phil said before, into cash, into generating cash. Growing that cash will enable us to then do these growth opportunities in the future. So for me, a great effort. We're in a whole different position to where we were before. We have lots of critical spares, consumables, all on the ground in a really, really well put together warehouse, which we didn't have before. So the thickness coming online, we're basically ready. We're poised now for really delivering into next year and getting ourselves into that phase 2 that we call, which is basically optimizing what we do. And as Phil touched on before, we are a very high fixed costs. We're sort of 70-80% fixed cost component. So with the same kind of costs, the variability is not so great. So if you're increasing your production output, increasing your concentrate ounces, that translates to much higher, a lower all-in sustaining cost, given that you've more ounces for pretty much the same money. And also obviously a lot more cash. So that's where we're focusing on next year. And yes, so for us, we're coming into a good phase at the end of this year. So I'm quite happy with that. We've got some questions from the pre-submitted ones that we'll get to shortly. And then in that I can touch a little bit more on some of the things that we're doing. But that's really the wrap up for today.
Phil, Sean, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Phil, Sean, as you can see, we received a number of questions throughout today's presentation, and if I could just ask you to read out the questions and give responses where it is appropriate to do so, I'll pick up from you both at the end.
Great, I'll take that. So for me, first question here, with the revenue cash flow you anticipate generating going forward, is it now not an opportune time to announce the initiation of dividends to shareholders? Look, I think as just mentioned, everything about what we are, where we are right now is sustainable growth in a safe manner. Everything is, our focus on safety, our focus on growing and being sustainable. Nothing's changed there, but we are now at that point where we're launching to the go forward. Getting to phase 2, completely our focus right now. With that in mind, and with the growth initiatives we talked about that we're looking to do next year, and including exploration, and including other opportunities to increase and grow this mine, I think right now it's way too early to talk about dividends. We need to achieve that growth. We need to look at the exploration plans. We need to look at our debt and dividend plans in the future. But really, it's certainly not until after we deliver those plans. That has to come first. It's too early to say, okay, we're going to do this. We need to achieve it. We pride ourselves on doing what we say we're going to do. We've done that from the beginning. We'll continue to do that. So next year is really about delivering on that growth plan. Then that will enable us to then build up some cash and build up the ability to look at those things, discuss it with the board. So certainly it's not a 2022 or 23 discussion point, but towards the end of next year, I would imagine that we, if we deliver, we should be looking at the mix of that, the mix of debt, mix of growth through exploration, or a dividend policy. And on that, I would just like to thank our shareholders, our loan providers, directors, and all stakeholders for their support, which has helped us to achieve a lot. Because early on, we weren't in the position that we're in now, and we are launching forward now, and that's really due to that support. So I'd just like to mention that. The next question that I have is, what are your current costs per ounce? Right. So currently, we're quoted £544 for it, but that's our life of mine, all-in sustaining costs. Obviously, in our first year and in moving into where we are now and building through those phases that we talked about, it's a lot higher, obviously, than that at the moment. But by getting into phase two, and mentioned before the fixed cost being so high, by getting into phase two, by increasing those ounces and increasing output of our concentrate production, that increases our revenue, increases the ounces against a very high fixed cost base. That by itself would translate to a lower cost per ounce. Again, with that fixed cost base being so high. So everything that we're doing right now is focused to achieving phase two output levels to bring those costs down. But right now we're not at the quoted 544, but we're certainly pushing as hard as we can to get to that point. And it takes a bit of time, obviously, because that is that phase two over the life of mine. So hopefully next year we can start thinking about looking at, giving guidance on what our cost profile will look like. But right now, until, again, everything is based on getting to that phase two, until we get to that point, it's it's not a meaningful number on that one. So another one, given inflation and costs rising across the board, roughly what are your current costs per month? So really, I think for me, inflation's impacted every business. I think we see the same cost pressures as most businesses do. But I think the simple way to answer that is that it's not even a natural hedge, I suppose, but what we do is we do get paid in US dollars, that Phil touched on before, and the majority of our costs are paid out in sterling. So for us, it's not a natural hedge, but it's basically a good offset for us in the immediate and short term, to offset those things. But certainly if the costs and inflation continue to rise, we will start to see what we do. But we're always looking at tightening the belt where we can, and maximize our efficiency. But certainly, again, high fixed cost base, it's really not the biggest impact for us, but certainly keep an eye on that going forward. So that's that one. Okay, I've got another one here which has come in, which is, do you have further improvements to make at your process plant to improve efficiency? So I'll flick that one to Phil.
Sure. So efficiencies can be taken multiple ways, I guess, but in the process plant, because of the nature of our ore, which is within a silica or quartz-based host, the silica can be, or is, extremely highly abrasive material. As a result, what we've found is in our crushing area, milling area, flotation pumps pretty much everywhere, getting on top of the wear rates on all the bits and pieces of equipment is effectively what gives us our efficiencies. So we've had great success in some things, like, for example, on a screen, we changed out a panel, used to change it out every couple of weeks, did one move by changing the materials, and then it basically became almost 6 months between change-outs. So we work on that same principle through crusher liners, through mill liners, through pump impellers and wear and wet ends, and even down to our flotation impellers and sparges and the like, on what sort of applications and wear rate materials that we put on these things. So that's what I talk about efficiencies. It's a slow grind sort of work that needs to be done, every now and then when you do get success, as we have been in every single bit, it just translates to, a massive time difference between when we have to do a shutdown. So that's what we call the efficiencies, and therefore gives us higher throughputs.
Okay, great. Got another question. Are you planning a media blitz despite the recent article in the Financial Times, the recent article being tipped in the Daily Mail more than once? The share price remains stubbornly stagnant. What will change this? It's less than a tenth given the consolidation of what it was nearly 12 years ago. I'm happy to take that if you like, Phil, or do you want to go there? Yeah. For me, I can't talk about what happened 12 years ago, but what I can do is just tell you that the only way we're going to impact share price is to keep doing what we say we're going to do, build confidence in our ability to deliver, get to that phase 2 that we're talking about, and the rest is really, really market driven. That, what can we do? All we can do is just keep reporting out there and saying, this is what we've done, this is what we're going to do, deliver on that. You build cash. In my experience, getting through to, growth into that exploration and popping in drill holes and getting results out and showing what the future looks like is the key. That, we touched on a few things here, questions around dividends, around stuff like that. All of those things look at, they change your profile. We've just got to keep delivering, and we've got to keep doing what we're doing. And I think next year, who knows? Let's see. But the media blitz, I don't know that that's the answer. I think the answer is consistent and good performance and deliver on what we say we're going to do. And I think that's the key. The rest is really up to the market, but that's as best we can do, I think. I have another question. Also, are the ventilation and power upgrades complete? And were these completed to budget? I'll give that one to you, Phil.
Yeah, sure. So the best way to answer is they will never be complete, because this is a thing that's an ongoing part of the business. So once you've actually done the ventilation work and power work for now, it will last until some months, or maybe 6 months, but we'll then have to move it again and again. So our first attempt at it wasn't world class, but definitely was better than in some aspects, better than anticipated. In other aspects, it's not so much. Many lessons learned that will then translate into the next upgrade and the next upgrade and the next upgrade. But it's a constant thing on this, and we'll be expecting to do this all the way through the life of the mine to make sure that we have ventilation and power everywhere we need it.
Great, thanks, Phil. Also got another one here, which is a good question, actually. With a limited hard rock mining industry in the UK, are you experiencing any issues with supply? So that again would go to you, Phil. And I think with that you could answer with not just supply of materials, but also of people, right?
Yeah, without a doubt, it has been in the mix of the top 5 or maybe top 3 concerns, issues that we've had to deal with, come up with plans, mitigate against, use whatever word you want, in the last 12 to 18 months. It has caused a significant amount of stress for me personally and to others. All I can say on that is the leadership team at SCOTGOLD has done an absolute sterling job working with the people that they have. They've been able to bring in people from sometimes the people that are outside of the country that just want to come back to Scotland. And that sometimes is an easy win. Other times you end up by having to work on very diligent systems and build things up from scratch, a la training system, and therefore that enables you to bring people in that might have good mechanical aptitudes or might have good understandings of how things work, and then and sometimes that works in 6 months time these people become good miners. So from a people perspective, we've had quite a lot of success with doing that, but it has been extremely stressful. As far as everything else is concerned, from getting explosives, getting the right machines, getting the right servicing, getting the right even down to the right little bearing that's particular to one particular machine that you might be here that you might not have anywhere else. Our procurement team, we rely on them. We ask them to basically do everything and anything they possibly can. and they just seem to deliver. They just deliver all the time. We put them under an enormous amount of stress, and these people were just constantly on the phone to all sorts of suppliers, everywhere from China to Europe to wherever. And sometimes they just get on planes and they just go and meet people and form relationships. And we've, within the last 18 months, we've probably done that several times, and it's helped us every single time to form a good relationship with suppliers and people and whatnot, make them part of the family or part of the team. And when we have, that's come through and paid big dividends. So in summary, it's been a huge stress. Okay, I can't understate that. And anyone who wants to build a gold mine in the UK needs to be very, very aware of that particular issue. But we've come out on top of it so far. And as Sean alluded to, we have now a really nice warehouse on site that, was nothing 18 months ago. Now it's beautifully well organised with a lot of wonderful critical spares and the like, which has just helped us get the tons and helped us get the, the availability and everything that was so important to us. But no, good question.
Okay, I have another question here, which is ignoring the COVID effect, which certainly wasn't SGZ's fault. Would it be fair to say the current management team thinks the mine was badly managed in the past? I'm happy to answer that, or if you want to take that, Phil.
It's all yours.
Okay, I don't think it's about being badly managed or anything in the past. I think there's COVID has had an impact on most businesses. Certainly with ours, but it created, for example, an opportunity for accommodation, which was a big issue that wasn't there in the first place. Where do you house, 95 people? Where do you put them? So in an area where there's just no accommodation. So that was a big factor, but I'm not saying COVID's the gift that keeps giving, but certainly it gave an opportunity to resolve an issue that was a big issue. So I think I don't think it's about being poorly managed. I think you go through phases. All mines go through a phase. People at the right time being available, a different focus, different approach, different skill set, and a different phase of the mine life. It moved basically from construction, from a project into an operating mine, and then to go through that, it's just sometimes different skill set, different team, and different available resources. So I think it all contributed to where we are today.
Well put.
And last one: when will there be an opportunity for a site visit?
Yeah, that's an interesting question. When we're trying to do some from time to time, I think I'll start to work with my communications team on that one to see when and how we can start making that more available and more publicly announceable. Not sure winter is the best time unless people like snow and the like, but I'll take that one offline and work the communications team on how best to approach that question, because it's a wonderful thing. I think people should see for themselves and definitely see the minimal impact that we're having on site, with our strict compliance to ESG principles, and I think people did see it. They probably walk away with a very lovely feeling that we all have on a daily basis.
Great. I think that's about us.
Yep. Phil, Sean, thank you very much for that. I think you've actually addressed all those questions you can from investors. And of course, the company will review all the questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Phil, could I just ask you for a few closing comments?
Yeah, sure. So as I said up front, the last webinar we did because we wanted just to announce some difficulties that we were going through at that particular phase that came across us quite quickly. But then we went after that straight into October again, just all people, as many as we could, back on site and delivered. The team did an absolute outstanding job to make sure that they focused on the metrics that they all needed to, rather than panic and start or thinking that everybody needed to do each other's jobs. So the mining team delivered on their tons and got the meterage and actually got up into the 415 level, so to prepare ready for the mining of that stope area, and at the same time got into the 430 ramp waste to make sure that tomorrow's tons are going to come as well. So they did an absolute sterling job. The process plant guys, they were dug in and got the process plant over the 4,000 ton mark, which again is above nameplate capacity. And a lot of mines in the world never really achieved nameplate, and our team did it without any upgrades whatsoever. So, like I said, going forward, I'm really quite excited about what they're going to do next with this thickener. All the technical teams, they just dug in and did some really good planning, make sure that the discipline was there with forecasting and understanding and the like. Procurement team did what they do, ran around everywhere. And then all the other teams, the admin team, the HR team, everyone got together and came out of this unscathed for October, made sure we got some really good metrics, got the ounces that we required, and got straight into November, ready for a really nice end to this year. So very, very happy, very proud to be in the position I am in this particular company. And then I'm hoping I can come back in January with even more positive news on the story heading towards phase 2, because phase 2 to us is the key. Once we hit phase 2 is when our revenue starts to come at the rate that we need it. And then from there, then we have the luxury of making all the decisions that Sean took us through. So thank you all again for your support. Thanks for listening to us. See you in January.
Great.
Phil, Sean, thanks once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SCOTGOLD Resources Limited, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Great. Thanks.
Cheers. Thanks.